Hello and welcome to this video interview. I'm very happy to have Paul Chin here. Paul, you are Chief Investment Officer at Centurion Asset Management, so welcome here to Frankfurt.
Thank you, Oliver. Pleasure to be here.
Before we start with the interview, I just want to ask you, how did you get into the real estate branch? Why are you here, so to say? Why did you decide to go into the real estate branch?
Well, when I came in roughly north of 30 years ago now, I kind of fell into the business, and I came in it through the credit side of the business. So at that point in time, I've worked for a number of different organizations, predominantly on the mortgage investment side of the business. So groups such as ING, Canada Life, major Canadian banks, international banks, did a stint with CMBS lending, Canadian pension funds, the whole thing. And then the opportunity at Centurion arose. Okay. And since I knew the space very, very well and was actively involved, I thought, my skill sets and relationships could have been additive to the organization.
Very cool. Here in Frankfurt, at this conference, you are the Canadian hero. Let me say it this way. Yeah, you are the Canadian hero. What is so good about Canada to invest there?
So very interesting, Oliver. Based on all of the themes that we've been hearing throughout the conference, Canada's experiencing the exact same thing, slightly differently. Supply-demand imbalance between housing, what's created some of that, the regulatory environment, government, how long it takes, how slow it is, cost to build, skilled labor shortages, all of those that created a supply-demand imbalance. On top of that, Canada has seen the largest and fastest population growth over the last 25 years out of anyone in the G7, and this is all legal immigration.
Okay. From a European perspective, excuse me if I tell you this, yeah? But you have the opportunities to go to Canada or to the US. What do you say to people who are also interested maybe in investing in the US? How do you get them to go to Canada?
I think Canada's not done a great job of differentiating ourselves from the US. And it's just because of the size of the US market. But I'll tell you what Canada gives relative to the US, it's a very stable environment. The rule of law, it's got very stable banking system and a financial system. So that creates a lot of stability. What you will get in the US is more volatility. They're more heavily reliant on capital markets. So when the capital market shuts down, it will create market disruption. So just as an interesting statistic, since 2000, there's been 570 bank failures in the US. There's been 0 in Canada, even through the great financial crisis. So that's a stabilizing feature. Okay. And then on top of that, in Canada, we've got a government program. It's a Crown corporation called Canada Mortgage and Housing Corporation, which basically stabilizes the multifamily market. They have a mandate to create housing, and what they do for lenders is they provide mortgage insurance. So you're insured into the principal, and what that then gives is stability in the marketplace, very low debt, cost of debt. Which helps the sector. Understandable.
Centurion is the largest private apartment fund. Is size an advantage?
Sure. We managed about $5.4 billion AUM in terms of US currency. So 160 apartment buildings and student residences. That total roughly 23,900 units. And it's geographically spread out across Canada, because the theory behind that is not every area of Canada is going to be heavily impacted, and our strategy is more of a suburban, ex-urban strategy, close to all of the various amenities, employment, shopping, housing, and growth areas. But by that very nature, we create relative affordability.
Okay. Finally, give us a kind of outlook. What is if we meet again next year here? What will you tell me then about the Canadian market?
I think the opportunity will still persist. Our federal government are trying to improve the housing situation. They recognize it. There's various programs that they're initiating. But the sheer volume of capital that's needed to solve this issue, I think this is decades in the making. We probably need $1 trillion of investment. And I think we're well positioned because of our vertically integrated nature, active asset management, just the size of our portfolio, to continue to capitalize on that opportunity.
It sounds good. Hopefully you will be back next year, and we will check whether that's right. Okay.
Well, we need to improve something for sure.
Paul, thanks for that interview. Thanks that you came here, and thanks for talking to you.
Likewise, I enjoyed it.
Alrighty.